So Access Bank Ghana is a subsidiary of Access Group, headquartered in Nigeria, with its operations across Africa and then also in the United Kingdom. Access Bank was founded in 2009 in Ghana, but only got listed on the Ghana Stock Exchange in 2016 at a price per share of 4 cedis, and is currently trading at a price per share of 4 cedis 75% as of today. This brings us to the economic analysis, where we'll be talking about global economic trends and then also what is currently happening in the Ghanaian economy. So according to the International Monetary Fund, global GDP or global economic growth is expected to increase by 3.2 at the end of 2024. However, we can also discuss some of the risks to these growth. Some being the geopolitical tensions, which I want to talk about, the fact that there are ongoing conflicts in Iran and Israel, and then also the ongoing war between Russia and Ukraine. On the flip side, looking at our Ghanaian economy, we've experienced the 2.9% increase in GDP, our target of 2.3 in 2023. At the beginning of the year, most analysts and experts were expecting that our economy was going to be weak. However, it turned out to be otherwise. And we are seeing a gradual recovery due to the ongoing fiscal consolidation and domestic debt restructuring exercise. At this juncture, I'll hand over to my colleague to continue.
Oh, so picture this. Access Bank has not only grown but excelled against itself in the broader banking industry. Now, I'm going to be telling you this story in numbers. Over the past 5 years, net operating income for Access Bank has increased by about 300%. Return on equity, a 44% average. Cost to income ratio has been around 35%, which has driven a 250% growth in profit before tax margins. We can also see that loans have tripled, whilst deposits have increased by 5 times. Both of these metrics are expected to double in the next years. EPS really climbed to 3 cedis 50 pesos, and we expect it to hit 12 cedis 90 pesos by 2027. But then let's zoom out into the bigger industry to get a clearer picture. In the banking industry over the past 10 years, operating assets in the industry has increased about 7 times, from 34 billion Ghana cedis to 230 billion Ghana cedis. Currently, the Ghana Stock Exchange Financial Index at about 2,300 points is expected to hit 2,800 points by 2028. And for profitability in the industry, profit after tax margins have been at an average of 35%, and the return on equity has stayed around the 20 to 25% mark over the years. Now, Access Bank has outperformed the industry on all these metrics over the course of the last 5 years. Notably, the non-performing loans ratio has declined from 14.8% to 3.8% from 2021, which is a stellar improvement, whilst the industry average has worsened. And this speaks to Access Bank's risk management and loan recovery strategies. Also, it's important to note that while the net interest margin for Access Bank has been below the industry average, other operational income has far exceeded the industry standard, and this has been driven by a larger customer base and affordable loans that the bank offers, which fuels other revenue through fees and commissions. Access Bank has proven to be a leader with a very, very strong position on growth, efficiency, and strategic execution. And this positions it as a standout firm in Ghana's banking industry. Next, Alex will give us a further analysis of the company.
Thank you, Jeff. So this brings us to the competitive landscape, where we are going to look at the top 5 market shareholders in the banking sector. So the banking sector is a perfect competitive market, and it's moderately concentrated at a 5M concentration ratio of 49.7%. However, Access Bank controls 4.6% of the total market share, making it one of the top 10 banks in the industry. We also consider the hottest 5 forces. We realize that competitive rivalry is very high in the banking sector due to the fact that it's very saturated. But there's also an issue of lack of differentiation in products as a result of the fact that it's a perfect competitive market. We can also look at threat of new entrants, which is low due to the fact that the banking sector heavily regulated. And then also, minimum capital requirement currently stands at 400 million Ghana cedis. Threat of substitutes is moderate to high, and this is attributable to mobile money service providers, microfinance institutions, as well as fintechs, which are capturing a part of the value chain in the market. Bargaining power of suppliers is also moderate. Bargaining power of customers or buyers is rather high due to the fact that there's low switching cost. This also takes us to the SWOT analysis. What I like to talk about concerning Access Bank's strengths is the fact that they have a very strong brand reputation across Africa and globally, and the fact that they have a very low non-performing loan ratio as their counterparts in the market. Some of the weaknesses are that there's stiff competition with all 23 commercial banks competing for the same share of profits. Also, we are exposed to some currency fluctuations. We can also consider some of the opportunities. Some of the opportunities are that Access Bank is currently focusing on ESG, and this earned them the best bank in ESG in 2023. Access Bank also has an opportunity in the SME market, and it is why they partnered with the IFC and MasterCard to improve their financial services or to enhance their financial services in the market. We can also consider, last but not least, the threats in the SWOT analysis. And we are looking at the fact that our economy is quite unstable, and then also we can consider cybersecurity threats as well. At this juncture, move on to the stock analysis further.
Okay, so we're taking the stock performance analysis and projections. Access Bank stock price has generally trended upwards, achieving a year-to-date increase of over 18%, trading currently at 4.75%, and we expect it to trade at 5 cities by the end of the year. For dividends, Access Bank last paid dividends in 2022 at 79 pesos per share and declared dividends of 80 pesos per share for the next year. But Bank of Ghana has generally restricted campaign banks from paying dividends, so it was not able to do that. But we believe the story is about to change because Bank of Ghana started reducing the restrictions on the banking industry, as we see in the current CAR reduction from 13% to 10%. So once Access Bank is able to start paying dividends, we believe they'll be able to pay dividends in excess of 1 cedi per share in the coming years, which is very high when you look at the dividends paid in the stock market. We take the valuation. We use two methods. The first was the discounted cash flow method. We discounted the cash flows to equity holders by adjusting for reinvestment in statutory capital. And at this, we used the cost of equity of 32%, which we calculated with the CAPM method. We came by a value of equity of over 1.9 billion, matched against the 173 million shares in the market, gives us a price per share of over 11 cedis. An upside potential of over 150%. The next method we used was the value PE ratio, which gave us a projected price per share of 7 cedis 84 pesos, an upside potential of over 80%. And the price to book ratio for Access Bank is currently below 1 at 0.61, which shows that it is a very strong buy stock. So I'll talk about the potential risks that could affect the operations of Access Bank. The first is the macroeconomic uncertainties risk in the market, and we believe that Access Bank is going to be able to survive because it has survived during 2019, COVID and DDAP, and it has remained profitable above the industry average, and is going to continue to do so. The regulatory risk, Access Bank is one of the banks which has experienced the lowest sanctions from BOG. So we know that this is not going to have any problems with regulation in the market. We take the credit risk, the probability that buyers, creditors will not pay their loans. We know debtors will not pay their loans, but we know that Access Bank has one of the lowest NPL ratios in the industry, and it is a testament of their strong risk management practices. So we know they are going to also overcome this credit risk. We take some of the reasons why we believe Access Bank is going to grow, and the first is that it has a very impressive financial performance over the years, consistently outperforming the market for the past 5 years of our analysis, and we know it's going to continue to do so. It is also growing at a very fast rate. Currently, it has added over 5 more countries to its portfolio in Africa, and we know it's going to increase its customer base and increase its profitability. The Ghanaian economy, thirdly, is also expanding, and we believe that demand for banking solutions are going to increase, and so they are going to remain profitable. So with all this, we believe that Access Bank is a wonderful company, and therefore we recommend a buy for this stock. Thank you very much.
All right. Thank you so much, Team ABNJ. Right. Okay. So I saw you were using the DCF for your valuation. What did you use? CAPEM, WAC, or CAPEM? All right. Can you scroll it up, please? What was your risk free rate? Your projection was for how many years? So your risk free rate. What was the span? How many years? 5 years. 5 years what? One. Okay. All right. Okay. So there are a lot of banks out there. There's GCB. There's Car Bank. There's. So why specifically Access Bank instead of the other banks? One last question. Your EPS. Okay, tell me what is an EPS? Any special? What is it? No, I know the calculation. What is it? What does it communicate? Okay. All right. Thank you.
Um, how many branches? How many branches does Access Bank have? And they have a definite number. Are you sure? All right. How hard did DDP hit Access Bank? How did you measure their? I mean, previous. What has been the previous revenue growth rate of Access Bank? Maybe over the past 5 years. What has been the average? Where is it? That's net operating income. I want revenue. You don't have that. Okay. No problem. What's the current monetary policy rate? Okay. Do you think it will go up or down? Why?
Good morning, ladies and gentlemen. We are the Wealth Wizards, and today we'll be taking you on a journey of understanding as to whether to buy, sell, or hold the stock of the giant telecommunication firm MTN. So, as the largest telecommunication service provider in Ghana, MTN is known for their services like data, SMS, voice, mobile money, consultancy, retail digital accessories, amongst others. Taking advantage of the exciting youthful population, its advanced infrastructure and technology, efficient marketing proposition, and lifestyle based proposition, MTN has been able to acquire a strong and loyal customer base. It accounts for 28.6 million of its active voice users, 17 million active mobile money users, and 17 million active users of data. This has enabled them to generate service revenue year on year of 32%, and Momo revenue year-on-year increase of 50.8%. A decline, however, in its voice revenue by 3.4%, which is as a result of the shift in the use of traditional voice to online platforms like Zoom, Microsoft Teams, WhatsApp Call, amongst others. It has also experienced an increase in its profit after tax by 35.5% as at the third quarter of 2024. Now, with this being said, we recommend a drum roll long-term buy. An investment in MTN comes with an attractive return profile. This is seen in its consistent dividend payment, high intrinsic valuation using a discounted cash flow model, and an attractive cash flow and returns profile. MTN has a long-term competitive advantage. They currently hold 73.6% of the market for telecommunication. They've been able to acquire a strong and loyal customer base, given their efficient marketing strategy and established brand loyalty. MTN is dedicated to strategic growth initiative. It's seen in their investment in network expansion and leveraging technology innovation. An example is the Ambition 2025 goal for growth, cost efficiency, and returning value to its shareholders. Moving to the financial analysis, MTN has evidently made good use of its investment from shareholders to generate profit. This is seen in its return on equity, which accounts for a 35% increase from 2018 to 2023 increase of 52%. There has been a substantial growth in its net profit margin from 14% to 37%. Revenue as well has grown from 23% to 35%. Now, as the only firm within its industry that is trading publicly, MTN is dedicated to ensure that it works within the 30-70 debt equity ratio set by borrowers. And this is seen in its 2023 debt to equity ratio, which accounts for 31.37%. Now, given an estimated average revenue growth rate of 22%, and a projected increase in the net profit margin, we're able to calculate our projected net profits. So using a estimated capital reinvestment rate of 31%, we derived our free cash flow to equity, which was discounted at a cost of equity of 25%, giving us an intrinsic value of 3 cedis 49 pesos. Now, looking at the industry within which MTN operates, we analyzed the industry using the Porterfice Force model, where we rated the rivalry amongst existing firms to be high due to the limited differentiation in services, dominance by few firms, huge investments, and high regulations. The threat of new entrants we rated as low due to the high capital requirements, regulatory hurdles, and established brand loyalty amongst these existing firms. The bargaining power of supplier we rated as moderate due to the relative ease at which these firms can switch suppliers irrespective of their heavy reliance on these infrastructures. Now, the bargaining power of buyers, we rated it as moderate due to the limited number of substitutes like Starlink, which we've all heard about now, and then the ease at which its users can switch to other networks without changing their number due to the mobile number portability option. Now, the threat of substitute, we rated as low due to the limited number of substitutes for traditional data services and the decline in traditional voice and SMS services, which has been offset by the increase in demand for data services, which is driven by social media and other streaming platforms. Now, the telecommunication industry has the potential to see an increase in its profitability due to opportunities like the rising population, the introduction of artificial intelligence tools, which will be driven by data services, the expanding digital sectors like cloud infrastructures, health tech, edutech, and fintech, as well as the growth in mobile broadband and network. However, this profitability status can be affected by risk factors like regulatory pressures, forex fluctuations, cybersecurity threats, and economic downturns. Inflation has slightly increased to a rate of 22.1%. And during the Monetary Policy Committee's meeting in September 2024, MPR was reduced from a 29 percentage point to 27 percentage point. CD, however, continues to decline at a rate of close to 29%, and GDP is forecasted to grow at a rate of 4% in this year. Now, MTN, just like every other firm, has its financial performance to be likely to be affected by interest rate and foreign exchange rate. This is seen in a sensitivity analysis that was conducted by the company itself. So according to this analysis, a 10% fluctuation in interest rate or foreign exchange rate would lead to a change in MTN's profit by 23 million Ghana cedis and 16 million approximately respectively. Now, factors that show a potential increase in MTN share price, for which we encourage people to buy, is seen in its positive market sentiment, favorable regulatory support, and strong operational performance. So with a current share price of 2 cedis 35 pesos and an intrinsic value of 3 cedis 49 pesos, we estimate a potential upside or capital growth of 50%, for which we reinstate our recommendation to make a long-term buy. Thank you.
Please take me back to your valuation. How did you measure the WACC? What discount rate? What did you use to discount the cash flow?
Okay, so for our discounting, we used the cost of equity, which was derived from the risk-free rate. We used a 10-year treasury bill, which was adjusted for default spread. Then we used the beta, and then we used the market premium, which consists of the base premium for a mature market plus the country risk premium, since we are in a country which has a default risk. No, please. Yes, we use the cost of equity. Yes. Okay, so when we say the growth rate, aside from us talking about the growth in the number of people, we're also talking about the growth also in the number of users, since there's an increase in that are now using the mobile phone and the
Um, you've done a good job. Right. So your projections was for how many years? Your projections. Yeah. Okay, it's fine. I've seen that. So answer. Your projection was for how many years? 9 years. So your risk-free rate was for how many years? You know where I'm coming from. You understand? Okay, fine. Another question. What's the relationship between the MPR and the inflation? Wait, what's the relationship between MPR and inflation? Just go straight to the point. Wait. You mean when the MPR goes up, inflation comes down, or when inflation goes up, MPR goes up? Or so what's your point?
There's an inverse relationship between interest rate and inflation. So if the government of Ghana wants to combat inflation, they increase the interest rates. And if they want to increase the money supply, they decrease the interest rates.
Okay, so I want to get the comment right. Does MTN have debt? They do have debt. Yes. So when you have to discount the discounting factor for the cash flow should include debt, right? Because there is a component of debt. So you need to measure the full work, which will give a certain weighting to debt, to consider debt in discounting the business. I hope you get it. So
Yeah, pitching to equity investors. That's why we use the cost of equity instead of the whole work.
okay. So on the grand scheme of things, debt also affects the upside to equity holders. I hope you understand. The company has to pay interest to debt holders before it will come and pay dividend to debt holders, right? And so if the company doesn't have debt, no interest to debt, to creditors. I hope you get it. Then the equity holders will get more dividend, right? More profit, more dividend. I hope you get it. And so in as much as you want to, in as much as you want to pitch to equity holders, debt also affects their upside. I hope you understand. Yeah.
All right. Good morning, everyone. So we are Team MBA, and we are here today to give a bullish pitch presentation on Total Energies. As we recommend a strong buy for the stock. I'm Musa Hedo, and I have here with me. So quickly, Brian, can you take us through the genesis of it? Started to pitch Total Energies to you. Total Energies is an OMC it's an oil marketing company that has over 225 stations in Ghana. Its MNC is in France, and they deal in fuel, solar solutions, aviation. That's Jet A and Jet on fuel. So we go to the business overview. They've been paying dividends consistently from 2019 2023. We can see that it's on the uptrend. Currently, dividend per share is at 1.14 cedis. If we check their financial highlight, revenue has gone up from 2 billion to 6 billion within the span of 3 years. And we can see that net income has gone up from 113 million to 169 million. And it is projected to reach 323 million by 2025. Now we go to compare Total Energies with its peers. So for the peer, that's Goil, Tullow Oil, and Total Energy. So the peer mean negative 1% for revenue growth rate, 6.5%. Net profit is a loss at 517 million, mostly borne by Tullow Oil. So we'll just use a median as the checker. So we see that Total Energy is 169 million. That's doing better than a median, which is 54 million. Now we go to return on equity. Currently, peer mean 12.2%, but for Total Energy, it's 32.4%. ROA, peer mean is on 2.8%, but for return on assets, it's for Total Energy, 9.3%. That should tell you that both figures are better than the industry. I believe that Total Energy is doing better with its net income than its peers. Now, for my part, we also look at the industry analysis, just some qualitative analysis SWOT, but we'll jump to the Porter's 5 forces analysis. For the threat of new entrants, well, in the OMC market, it's difficult to permeate the market because you need capital requirements, very large sums, And for the bargaining power of buyers and bargaining power of suppliers, both sides are moderate. One side influenced by economic conditions, the other side reliance on long-term contract, threat of substitute products. We know that the EV market is growing. There are more electric cars. Even in Ghana, we are having some charging stations coming on. So that could impact fossil fuel demand. Lastly, we looked at the intensity of competitive rivalry. We know that Total Energy is the fourth largest OMC by market share, and others like Gore can capitalize on economies of scale to do better numbers. Musa.
So now we decided to look into the stock market analysis of Total Energies. If you don't know, you should know that Total Energy started the year at a share price of 9 cedis, and in just over 200 trading sessions, the stock price is up to 12.88. This represents a capital gain of 42.7. This capital gain tends to put Total Energies among the top best performing stocks in the bourse, just behind Unilever, New Good, ETF, GCB Bank, MTN, and ETI. Now we decided to capture the trading metrics of Total Energies. You can see the volume traded in blue and the value in red. One may ask about the hikes that happened between February and April, and this has to do with the dividend propagation that happened between that period, resulting in those hikes because investors were reacting with the DPS that they announced. So we are amalgamated the volume traded for the 9-month to 10-month period, getting a volume of 604,029, translating to a turnover of more than 6 billion. What this simply means is that Total Energies is one of the most preferred stocks in the bourse. Fast forward, now we decided to capture the economic analysis. So according to MPA, where we know is their regulator, Total Energies is well positioned at the 4th place, just behind Goel, Vivo, and Star Oil, meaning that in the downstream petroleum industry, Total Energies is one of the most dominant and recognized OMC company therein. So here we decided to capture the Brent price, since it's one of the indicators that really influence their performance, their revenue growth, and the likes. So you can see Brent from year to date, it has been on the downside, and this has to do with the OPEC plus production target for the year ending, as well as the USA economy, all influencing this, and also the tension in the Middle East, resulting into this drift. Despite that, when you look at gasoline price, it has rather been on the upside, and this is surprising because when Brent is falling, you expect gasoline to follow suit, since there is a direct relationship between the two. But here it's otherwise, and this is because of the monumental depreciation of the cedi. If you don't know, you should also know that from year to date, the cedi has depreciated by more than 25%, making it among the worst performing currency in the continent, just behind Zambia, Gambia, Nigeria, and South Sudan. So we also decided to capture the key components that really influence their volumes. And we realized that gasoline and gas oil are the major contributors, contributing more than 90% of their sales volume. They're all helping their revenue growth, and can see that for the quarter, for the 5-year quarter here. All this, we had it from MPA, which is their regulator. So now to the financial analysis, Adam.
Okay, the financial performance of Total Energies has been beyond impressive. In terms of liquidity, the company has achieved an optimal liquidity ratio. Looking at the current ratio specifically, we found out that the ratio of current assets to current liabilities between 2019 and 2023 averages 1, indicating efficient working capital management, meaning that Total Energies does not have excessive assets sitting idle, and at the same time, it's liquid enough to fulfill all of its current obligations. Looking at in terms of financial risks, the company profit before interest and tax higher than its finance cost, indicating that Total Energies can conveniently fulfill its interest obligations without affecting its ability to pay competitive dividends to investors or even retain some for expansion. Looking at the debt to equity ratio, we see that Total Energies is heavily debt financed, given the fact that debt is significantly higher than equity. Now, this increases the financial risks of investors, but at the same time, it increases their potential rewards, given the fact that debt is a cheaper source of finance as compared to equity. Also, debt financing gives the company a tax shield, which means that Total Energies has tax savings as a result of the interest payment on debt, which has a positive impact on the company's cash flow. Also, debt financing instead of equity avoid diluting the earnings of shareholders, which is demonstrated in the consistent rise in the company's earnings per share over the years. Now, the fact that Total Energies uses debt and retain earnings as its major source of finance instead of issuing out dilutive shares indicates a strong financial standing of the company. Looking at the revenue structure, we see that Total Energies has been consistently increasing its revenues over the years. Between 2019 and 2023, there's more than 100% increment in revenues. In fact, 131% increment in revenues, which we forecast to continue in the same direction. Also, cost of sales has been increasing consistently, but the consistent increment in gross income indicates efficient direct cost management, which has led to a healthy free cash flow to the company, which we can see increasing consistently every year, with the only dip in 2021 as a result of substantial increment in direct and administrative expenses from the previous period. This has put the company in a great liquidity position and in a great position to pay competitive dividends to investors, which they've been doing every single year.
So now let's expound why we recommend a strong buy for the stock. To begin with our first valuation metric, which is the discounted cash flow. We calculated work by first of all finding the risk-free rate of a 5-year old average rate bond, having at a rate of 8.35. Beta was based on the volatility of Total Energy's share price performance in the Bourse against the broad market index, arriving at a beta of 0.95. Calculation was co-variable divided by variance. Cost of equity 12.88 and the cost of debt after tax of 26.78. Having considered all the necessary assumptions, we ended up getting WACC of 20.56. We know the WACC represents the discount rate, help us to discount all the future cash flow back to its present value, having adjusted with EBIT, taxes, CAPEX, DNA, and changes in net working capital, eventually getting an enterprise value of 1,590,510. And adjusting with the cash and debt and dividing it with outstanding shares of 112 million, we ended up getting an equity value per share of 15.98, which is way above the market share price. So that's the first valuation metric. The second one, we have the historical price to book, which ideally considers the net worth of the company. That is the difference between what they owe and owe. So with that, we capture the share outstanding for the last 5 to 6 period, the same as the share equity. We ended up getting the market cap, the book value per share, and the price to book, and you can see the implied share price around 14.44, which is so above the market share price. Now with the comps, which is ideally considers the industry that Total Energy finds itself in, and with our conclusion here is that Total Energy is highly competitive with players like Tullow and Goel. Total Energy is trading at a premium share price of 12.88 against the industry average of 88.70. Captured key items as well as the financial data, helping us to get the multiplier for the industry as well as Total. You can see the figures there, implied share price of that. So we didn't leave it there too. We put everything in a football analysis. You can see all of them here. You can see the inverted line passing through everything. Meaning what we are doing is sound. We decided to weight it based on the business model. You can see it there. Affirming why we are recommending a strong buy for the stock.
So to cap everything, it was prudent that we looked at some risk and catalysts that can be involved with their main product. That's global oil prices. Currently, Brent is trading at $73, but it's forecasted to range between $75 and $80. The impact on profitability is that there will be a potential margin squeeze due to increased cost of goods. That will translate to a likely pressure on share price. We'll just also look at geopolitical tensions. We see that there will be moderate impact on oil prices. Stability in oil prices will help profitability. That will translate to neutral impact. Looking at all these things, my colleagues have enumerated, and the risk and catalysts that we've looked at. This is why we say you should buy Total Energies. Thank you.
Hi. Please, can you take me back to your valuation? What was your cost of debt? How did you measure that? Yes. How did you measure it? How did you calculate it? Yes. Yes. How did you measure it? Did you add something to something, multiply something by something, subtract something from something? First of all, what is the cost of debt? Okay, that is debt. Okay. So then how did you measure the cost of debt that you have there? I mean, it's fine if you don't. You can just say, oh, we have forgotten or something. Let's move on. Okay, thank you. Okay, so I have one more question, right? Please, if it's beyond Jesus. Well, you are recommending that we buy Total Energy, right? But if you consider the move for sustainability, I mean, people are preaching that we should move from fossil energy to more renewable energy sources. I hope you get it. Your gentleman mentioned the proliferation of EVs on the Ghanaian market, right? So based on all these things and the preach against for using more renewable sources of energy, why should I invest in a petroleum company?
Yeah. Anyway, it's okay. It's okay. Go to your first slide. Your very first slide. I saw something. I'm recommending a buy, right? Go to your first slide. This is your first. This one. No. The first, very first. Okay, it's not this one. All right. So the question I'm asking you, the answer is in your document. It's okay. So listen to it very well. Supposing I invest in MTN, what is the least return I should expect? Total. The least return I should expect. Okay. All right. Thank you. Societe Generale has established itself as a trusted provider of retail, investment, and corporate banking. But what does its financial tell us? Let's take a look. Its price to earning ratio is 1.21, below the industrial average of 0.63. Its market price is below the current market price of 1.5 series. So now, as we look at the performance of the market, let's look at it from the macroeconomic perspective. The GDP growth is at 6.9, up from 2.9 previously. The inflation is 22.1%, and then the monetary rate is 27%, slashed by 200 basis points. We also present on the private sector contraction, the Ghana Stock Exchange Composite Index, and then the government expenditure. Okay, so we would like to look at the industrial and break it down to the firm level, the performance of the Societe Generale.
All right, so having looked at the macroeconomic perspective, let's narrow it down to the industry-specific situations. First and foremost, let's look at the industry figures. Societe Generale has a net income after tax. The industry has a net income after tax growing with over 100% between 2020 and 2024, with an average growth rate of 27.45%. And then with their total assets growing at over 163% between 2020 and then 2024, with an average growth rate of 27.47%, a clear indication that the industry is doing well in managing its assets. Okay, let's look at some industry conditions. According to a report from All African, the banking industry is doing so well in managing its deposit, constituting a larger portion of their total assets. But then the report also cautioned them to intensify their loan recovery efforts for long-term sustainability purposes. So Societe Generale has a competitive edge due to its international backing, and then has high, tight underwriting standards, which means that it takes its prospective borrowers through some rigorous procedures which enables them to borrow to people who are likely to pay back. Okay, let's look at some strengths, weaknesses, opportunities, and threats that Societe Generale faces. Some of its strengths are high return on assets, good capital position, and regulatory compliance. And then it faces some weaknesses with high non-performing loan ratio, limited market focus, and then some opportunities are increasing digital banking adoption, the fact that people are embracing digital banking, expansion potential for the financial services. It also faces some threats as the volatility of the larger Ghanaian economic landscape, and then the increasing competition from other banks. My colleague will continue from here.
Okay, so now that we've learned about the company, the industry, and the economy at large, let's look at the financials. So we analyzed the financials in two ways. We looked at the key financial metrics, comparing Societe Generale to the industry averages. The industry average being an average figure of all the banks on the GSE. We also did a 5-year, year-on-year ratio comparison between the two, the same two parties. We also provide a 5-year average for all the ratios we calculated. So with regards to the key financial metrics, we looked at net interest income, income after tax, total deposits, assets, and equity. We also included a graph to help visualize the financial figures we have written. So from the graphs, you can clearly see that the industry is doing far better than Societe Generale for most of the financial items we have here. For price earnings ratio, we see that Societe Generale has a ratio of 1.21, with the industry having 0.63. The price earnings ratio shows us that investors believe that that particular company is worth investing in and are therefore ready to pay more despite the low gain they might be earning in the short term. However, despite their high P ratio, their year-on-year ratios compared to the industry averages tells us different. We look at their ability to, we look at the company's ability to take on loss, which is the capital adequacy. We look at the amount of cash that they have to cater for their current liabilities, which is the liquidity. We look at the amount of loans that they give out that they are unable to recover. That's the non-performing. We also look at the amount of net income they're able to generate from both their equity and their assets. And we also look at the growth rate of their earnings per share over 5 years. So from the graphs, you can see that for capital adequacy, Societe Generale has been falling for the past 5 years. Although the industry has had a few ups, it has also come down. The 5-year average tells us that Societe Generale is doing better than the industry. However, with the 5-year decrease, we believe that it will continue to decrease till it falls below the industry average. So from the graphs, we see that the only thing that Societe has a high advantage over the industry in is the amount of cash that they have as a bank. So from there, let's look at the value of Societe Generale. So to evaluate Societe Generale, we use the discounted cash flow method. We took the free cash flows from half year 2020 to half year 2024, and then used the assumptions at the bottom left corner to forecast the free cash flows for 25 to 29 and beyond. From our calculations, we ended up with an intrinsic value of 0.03. When we compare this figure to the current market price of 1.5, we can conclude that Societe Generale is currently overvalued. Based on that overvaluation, we are recommending that all investors sell their shares in Societe Generale due to the significant overvaluation, and also with the market value of 1.5 exceeding the intrinsic. The company's ratio from the year-on-year that we saw that it was only one ratio where Societe was doing better than the industry. So that is also a factor. And then the high P ratio also tells us that investors are paying a premium for an earnings growth that may not actually materialize. So based on these three factors, which we had already talked about in our investment thesis, we are recommending that investors should sell their shares in Societe Generale. Thank you.
All right, so we make this recommendation with some of these risks in mind. The credit risk, which is looking at the ability of Societe Generale's borrowers to repay back their loans, looking at the volatility of the economy, chances are that they will not be able to pay. With the competitive risk, the fact that Societe Generale, yes, has that international backing, but these days, a lot of banks have that international exposure. Other banks also have the same international backing. Regulatory risk, which is looking at the fact that Societe Generale has to comply with both international regulations and then local regulations, which sometimes can not really be comfortable for the organization, bringing on additional cost and all of that. And also looking at the market correction. We are the market movers. Thank you for your audience.
Thank you very much. Can we go to evaluation? Where is what rate did you use to discount the cash flow? Okay, cost of equity. Right. Does Societe Generale have debt? Does the company have debt? They have debt. How much debt? Okay. So how did you measure? How did you compute the cost of equity? Yes. What's the share premium? Who adds that? Did you add it? Did you add it? Did you add? You said that the share premium is the rate that is added to the risk-free rate. And I was asking who adds it. Thank you.
You've done a good job. All right, so you projected for how many years? All right, so is equity a long-term investment or a short-term investment? Yeah, stocks. They're long-term, great. So the risk-free rate, you used T-bill of 365 days bill, and this is a short-term investment. Do you get what I mean? This is 1 year and it's gone, but we are projecting for 10 years. And you are using 1 year risk-free rate. You think in 10 years' time it may be like that, the risk-free rate? Good. Might change. Right. Good. Right. And it's okay. Let's come to your beta. What's beta? What does it do? All right. So looking at the rate is 0.04. That's right. Is it moving it or your beta is 0.04? So is it moving the market or is it dragging it down? So it's still growing, but you're telling us to sell it. You are saying when the market moves, grows, it's also growing, right? All right. Now the beta says is growing, your own beta says is growing. Why are you telling us to sell it? Okay. See, because of your risk-free rate, your projections, there's a question mark on it. They get it. Yeah. So I think you've done a good job. So thank you.
So, good afternoon. Uh, Good afternoon, esteemed judges and audience members. My name is Anido Hosalom, and I'm excited to present my investment pitch for Republic Bank Ghana PLC. As a leading universal bank and a subsidiary of Republic Financial Holdings, Republic Bank is well positioned to seize the opportunities presented by Ghana's evolving economic landscape. So, Republic Bank has cemented its reputation as a comprehensive financial powerhouse, offering a wide array of services across corporate, commercial, and investment banking, alongside retail banking, mortgage banking, and microfinance. As Ghana's leading provider of home loans, Republic Bank has not only dominated the mortgage sector, but is also instrumental in promoting home ownership, which is a critical pillar for economic development. With a clear and compelling vision of being a financial institution of choice for its customers, staff, and stakeholders, Republic Bank is dedicated to customer satisfaction, employee engagement, and fulfilling its corporate social responsibilities. Okay, as of the most recent data, Republic Bank is trading on the Ghana Stock Exchange at 66 pesos. I'm confident that the bank's true potential justifies a price target of 93 pesos based on my detailed analysis. This price target is grounded in four key pillars, which I outline here. They are the operational restructuring, a diversified business strategy, an attractive stock evaluation, and their projected growth. The bank has made bold strides in overhauling its core banking system, significantly boosting operational efficiency. And these advancements include a cutting-edge security measure to safeguard customer assets, giving Republic Bank a competitive edge in customer service and security. The bank's diversified approach across multiple sectors not only helps it to spread risks, but also to mitigate financial, helps it not only to spread risks, but also provides it with a stable revenue stream, stable revenue base. This helps the bank thrive even in economic instabilities or during economic fluctuations. Okay, so Ghana's economy is currently navigating a challenging yet promising period. Our current GDP growth rate stands at 1.6%, but longer term outlook projects a more optimistic GDP growth rate of 6.9%. This shows that even though our immediate growth is modest, the economy contains strong fundamentals which will drive further expansion. Now, the inflation rate currently standing at 22.1% and interest rate at 27% may pose challenges for Republic Bank Ghana. Despite all this, the banking sector is projected to grow at a steady rate, particularly in the net interest income, as consumer demand for mobile and banking solutions continue to increase. Okay. So I conducted a comprehensive analysis of Republic Bank's financial health. And then these are key metrics I got from it. So with a beta of 0.6455, it shows that the bank is relatively stable as compared to the market. With a price to earning ratio of 3.15, it shows that the bank is able to generate profits. And then also with a PB ratio of 0.6455, it shows that the bank is currently undervalued. So here you can see my intrinsic value at 0.93, as I stated earlier. Okay, so I conducted a SWOT analysis, a breakdown of the bank's strengths, weaknesses, opportunities, and threats. So the bank has experienced consistent revenue growth, which is due to the successful lending operations. And then also it has a leading position in the mortgage industry in Ghana, which helps it to build it, which provides it with a loyal customer base. Also, it has a reliable cash flow from operations, successful operations. Opportunities, the increase in demand for mobile and digital banking solutions provides the bank an opportunity to not only improve its customers' experience, but also its future growth, drive its future growth. Our economy is currently stabilizing, so it's going to increase the bank's performance as well as supportive government policies. The banks can also strengthen its risk management practices to help safeguard profitability. As for the threats, economic volatility, both global and local, could impact the bank's overall performance. Regulatory changes could affect its operational flexibility, and then intense market competition from its competitors could also erode its market share. Now here is a diagram of its projected earnings for the next 3 years. And then this is backed by these three things. So that, as I said earlier, they're improving economic conditions. It's going to drive the bank's performance, increase profitability, and their earnings per share. The high interest rates, though it may pose challenges to borrowers, it's a critical profit driver for banks. And also the digital transformation, since everything is going digital, the bank is also changing. And then this will not only attract tech-savvy customers, but it also drive their growth. Republic Bank takes ESG factors seriously. It boasts a board of directors, a strong governance with 5 independent non-executive directors. It's also committed to ethical practices through continuous training and development programs for its staff. In the environmental space, the bank has projects in healthcare, education, and in climate action. The bank has also made significant donations and volunteerism projects across the nation. So just like any other investment, investing in Republic Bank comes with certain risks. So when the economy isn't performing well, the bank isn't going to perform well. And also their high debt levels, right now it's being managed well, but if something happens, it could lead to financial risks. Also regulatory changes, as I said earlier, by government and other governing bodies, and then market competition. Okay, so in conclusion, Republic Bank represents a well-balanced investment opportunity. They have a clear strategy for growth. They have a diversified revenue stream, and then they also are committed to fulfilling their social corporate responsibilities. All this puts it in a position to improve, to grow in the future. So I would like to encourage you to consider investments, to consider Republic Bank Ghana for your investment portfolio. Thank you.
Thank you. you so much, Salom. All right, so can you listen? 2018. Okay. The share price for Republic Bank was 1.48. It is currently 0.66. As a shareholder, as of 2018, why are you still telling me to keep buying Republic Bank? Meanwhile, the price has dropped to 0.66. No. As of 2018, the price was 1.48. The share price, 1.48. And it has dropped currently what? 0.66, right? So why are you still telling me to buy? So as of 2018, if my money worth the shares I had worth 20,000, right now it's about 10,000. That's fallen drastically. Okay, it's like half is gone, and you are still telling me to go ahead and buy. Like, what do you mean? And even buying a target price is 0.93. I'm saying this out of like what an angry investor will ask you. You get it? So like convince me, tell me something. So your projection is for how many years? 2025. 3 years. Equity is a long-term investment, and it did 3 years, and you're using 3 years to convince me. What's up? Is it I've left everything? I'm in the investment industry. This is how clients come. They're angry. You get it? So tell me something. But that is what is needed. If you don't project, long term is 10 years and above. You do 3 years. 3 years is what? Okay. Thank you.
Can I see your valuation? Okay, so you don't. Well, all right, I suppose. Earnings per share, price to earnings, that's intrinsic value, beta. Where is your discounting rate? Okay, so did you just use the intrinsic valuation to value the business? Yes, that's just what you use, right? What was your discount rate? Okay, so how did you measure how did you come up, or how did you end up the asset based valuation value? What did you consider? What did you compute? Yeah, so how did you compute it? Okay, and that gave you 0.93. Okay, and based on that, you want us to buy. Okay. All right. So I suppose you want us to buy, right? And so what is it, just based on the valuation? Okay, the bank is doing well. Right. But moving forward, what are some of the things that the bank wants to put in place to keep growing their revenue I mean, keep growing their net profit. I mean, okay, okay, okay. But what are they going to do moving forward to maintain their position as leading, um, most diversified, leading in home, mortgage, or maintain um, stable revenue growth? What are they putting in place?
They are also right now commercial investments. And then also
Hello, everyone. Imagine Ghana's oil and gas future, which is more cleaner, more sustainable, and empowering communities. Yes, the vision is real, driven by innovation and expertise. This is no other company than Total Energies Ghana. I am in the person of Rebecca Apia. These are my teammates, and here,
Nathaniel Bochi.
and we are the market masters. Now let's talk about the company. The company was listed on the Ghana Stock Exchange on 31st December 1991 and has its market cap of 1.4 billion Ghana cedis, its revenue of 3.3 billion Ghana cedis, and then also its current share price of 12 cedis 88 per Swiss. The company deals in several products which includes fuel, aviation, LPG, and solar. Ghana's currency continues to depreciate at a rate of 171% in the past 4 years, which has led to increase in fuel prices at a rate of 125% also in the past 4 years. The oil and gas industry contributes 6.89% to the gross domestic product of Ghana, and this same industry faces a decline growth rate of 15% in the past 4 years as well. The main reason why we are recommending a buy is mainly because of revenue, and revenue has been growing at a rate of 18% in the past 4 years. Revenue is collected mainly from the service stations, and currently Total Energies Ghana operates over 263 service stations across the country, which has a wider reach to customers and then also boost revenue as well. And having a dividend yield of 5.64% and comparing price to earnings ratio, which is 6.32%, 6.23 times, which is very low compared to the industry, which is 9 times. But wait, have you ever wondered how dividend announcement can trigger a company's stock price? Yes, exactly what you're thinking. Dividend is quite sensitive to a company's stock price because for the past 4 years, each and every growth in the company's stock price was mainly affected by the dividend growth rate. And our sensitivity analysis here shows that a 5% increase or decrease in a company's dividend growth rate affects the company at a rate of 39% increase and 28% decrease in a company's stock price, which will have our intrinsic value still around 20 cedis. Now, moving on to the financial overview, where we have gross profit margin of 10% and net profit margin of 3.3%. Having a cash flow growth rate of negative 3.3%.
It all sounds good, right? But let's not be carried away with the goodness of the company. Total Energies is also affected with certain risks as well. The Ghanaian currency, as compared to the US dollars, for the past 4 years in our research has shown a depreciation of 171%. Also, the global price fluctuation affects the gross and net profits of Total Energies. Trade receivables impairment laws also affect the revenue of Total Energy. Industry risks overview also, whereby the change in the regulations also in the industry affects the operations of Total Energy. Threat from new entrants also affects Total Energy, and also the pressure from other oil marketing companies affects Total Energy.
Using the Gordon growth model, We estimate the intrinsic value of Total Energies Ghana to be 20 cedis 4 pesos per share, based on an average dividend growth rate of 54% and a cost of equity of 60%. The market price of 12 cedis 88 pesos per share and then the intrinsic value of 20 cedis 4 pesos per share is indicating that Total Energy stock is undervalued, and for this reason, we recommend a buy. Our analysis suggests that Total Energies Ghana is well positioned for growth with an estimated revenue growth rate of 18% and a dividend growth rate of 54%. Now, I forgot the last one.
Thank you so much. I'm saying your thank you for you. So you done a good job. I like your presentation. You made a statement that we are recommending to us mainly because of the revenue. You know what's happening in Ghana? We make a lot of revenues, okay, but we are still poor, a poor country. We make a lot of money from our cocoa, our gold and stuff, and we are poor. It doesn't make sense, right? So if you are telling me to buy Total because of revenue, what are you trying to mean?
Okay, thank you very much for the question. So all that remain is that when a company gains revenue, that's when they're able to pay dividend out of it. And then shareholders, all that they want is dividend. That's what they are interested in. So if the company does not make revenue and then gets a net profit, how would they be able to pay dividend as well? So yeah, that's how I recommend it.
Something. How do you get net income? You're an accounting student. How do you get net income? From revenue. What happens to get net income? Exactly. So if you are telling me I should look at your revenue and just buy, meanwhile you are spending, let's say 80% of the revenue on expenditure, what will happen to your net income? Exactly. Okay. So that is Ghana now, and that is what you are telling me now. All right, so thank you. That's just one question.
Hi, we are not done. We are not done. We are not done. Don't be in so much of a hurry. Your valuation. Can we go to your valuation? Okay. So what type of valuation did you use to value your business? Okay, so you use the dividend. So what was your discount? What was your discount rate? Wow. Okay, what's instructed the cost of equity? Okay, so what risk-free rates did you use? Based on what? Treasury bills. Okay. Well, you mentioned that you are recommending the stock based on revenue. And so I'm going to turn around your question and ask you that what is the company what are some of the things the company is putting in place to grow revenue?
So one of the things the company is putting in place to generate revenue is basically we know that Total Energy generates revenue from their network services, and so they are thinking of, or they are bringing to generate more revenue from their network stations.
Clear your spirit. You guys are good, like honestly, but understand like what you are doing. Okay, read more. You are good, like honestly. Okay, all right, can go. Thank you.
Good afternoon, ladies and gentlemen. We are Market Mavericks, and I'm Courage Gamo, and I'm here with.
Sindenti. Abner Hansen.
Okay, so we are here to pitch on Benso Oil Palm Plantation Limited, and these are our outline, and we are going to talk about the company overview, and we'll present to you our investment thesis, industry and market analysis, our key financials, our valuations, risk factors, and catalysts for growth. Then we'll gladly conclude to you guys. So I advise you to pay key attention to us as we delve into the presentation. I'll let Cindy start for us.
Thank you. So Ben's Oil Palm Plantation is an oil palm plantation which is located at Edum Benso in Takrade. So it was incorporated on 22nd of January 1976, which is specialized in producing of crude palm oil. So they use the crude palm oil they refine it into palm kernel and others. So Ben's Oil Palm Plantation has been able to dominate West Africa as well as the leading palm oil plantation in West Africa. So this is the Bob share price and its performance. So as at January 2024, this was how much Ben's Oil Palm Plantation was selling. And in October, this is how much they are selling, 25.26. Also, their share price for Ben's Oil Palm Plantation is 22.26 Ghana cedis, and its shares outstanding is 34.8 million. Its earning per share is 2.2926, and price per earning ratio is 11.02. Dividend per share is 2.330, and market capitalization is 879 million Ghana cedis. Also, we'll recommend investors to hold with their Ben's Oil Palm Plantation. This is because with Ben's Oil Palm Plantation, it's operational, efficient, and cost management. So with this, Ben's Oil Palm Plantation is able to keep production cost low while producing efficiently in Ghana. Yeah. So also solid earning growth and reasonable valuation. Ben's earning per share is 2.29 Ghana cedis, meaning that it's priced reasonably for investors. Also, the market leadership in West Africa, Ben's Oil Palm Plantation is the leading oil palm plantation in West Africa, meaning that they are able to distribute to other African countries, and other African countries are able to use it to use this oil to make things like shea butter and palm oil for us to use for food as well. Also, support from Roma Africa. So Africa is the makers of Frito, and Ben's Oil Palm Plantation gets support from them. Whilst Roma Africa gives Benso the recognition as well. I'll hand over to Abuna to take over.
So, what does the internal factors of Bob indicate? One of the strengths that Bob has is its large plantation area. So, Bob has a large plantation area of 17,000, and this helps it to produce on a large scale and make and regional demand. It also helps it to produce at a lower cost and sell at competitive price. Bob is also a company that has made a name in the industry as one that is sustainable and adheres to sustainable practices. So they hold environmentally friendly farming practices at heart. And we saw this when Bob invested in the food waste conversion technology. So it means Bob is a very sustainable company. On the other hand, Bob is susceptible to unpredictable weather changes because it's highly dependent on the weather. And because it doesn't have any irrigation system to rely on, because of unpredictable weather changes, it has inconsistencies in the yield, and also there's fluctuations in the quality of the oil palm that they produce. It also faces high labor cost because in the sector that it operates in, high labor cost is a pertinent problem that they normally face in the agricultural sector. Some of the opportunities that are available to Bob is the West African market expansion. So Bob is strategically located in Ghana. It has other West African countries around it. And one thing we have in common with them is we all consume palm oil. So Bob can expand its tentacles to all those companies and then establish itself there. One threat that Bob faces is climate change. You know that climate change is a topical issue in the continent, on the global scene right now, and Bob operates in the agricultural sector. So Bob faces the threat of going through floods and droughts. So we advise that Bob takes this into consideration and cushions itself against it. So what about the environment that Bob operates in? As we look at the economic landscape, we see that Ghana's economy grew 6.9% in the second quarter of 2024, which was the highest in 5 years. And the sector that contributes to this is the agricultural sector. And Bob operates in the agricultural sector, so it means Bob operates in a thriving and growing sector. And that means that Bob will not be left behind. It will also thrive and grow, and it has market expansion possibilities as well. On the other hand, inflation rose to 21.5% in September 2024. And as a result of that, Bank of Ghana had to reduce the interest rate to 27% to ease the economy and to facilitate economic recovery. Next. So what about the external factors that affect Bob operations? So the substitute for Bob is moderate. We say this because there are other alternatives to palm oil like sunflower oil, synthetic oil, and coconut oil. But palm, one key ingredient that cannot be replaced by all these oils, especially in our cosmetics and in our soap, and even in our food. And one food we can't do without when palm oil is what we affectionately call gobe. And what about the bargaining power of buyers? So the bargaining power of buyers is moderate to high. And we say this because Bob sells to large corporate buyers. And large corporate buyers have the ability to negotiate price. But Bob is still able to sell at the price that it wants to sell to because it differentiates itself by producing sustainable and quality oil palm. So they have no choice than to buy the products at which Bob sells it to them. Driving in the industry is highly competitive. And we say this because there are a lot of companies that exist both globally and locally that produce palm oil. But Bob differentiates itself by being an established player, having strong distribution networks, and by also having high profitability. And as a result of that, it has become a market leader or an industry sector. Bargaining power of suppliers, we say, is moderate. And we say this because Bob produces some of its inputs within, but it also sources palm fruits from outsiders, from the smallholder firms in the community. And Bob balances power by creating mutual dependence. So Bob teaches these farmers how to farm sustainably, and in return, Bob inputs from them, so it balances the power that the suppliers have over them. The threat of new entrants is very low. For new entrants to succeed and to penetrate into the agricultural sector, they need to invest largely in high capital, in expertise, in machines. And Bob has already established itself by investing largely in all these sectors. And that will make it difficult for new entrants to penetrate into the industry. So I'll leave the floor for Courage to go.
Okay, so I'll talk about the performance outlook. So as we can see, this is the performance outlook of Bob, the current ratio, quick ratio, and the gross margin, as we can see. And this is the industry competitors of Bob: Unilever, Guinness Ghana, and Farmer. So we can see that Bob is performing below average, but this shouldn't discourage investors that as it's performing below average, they should consider selling their shares. We are recommending a hold for Bob. And these are the projections that we did. Revenue, profit after tax, operating profit, and gross profit will also grow from next year as their performance is also growing. And our key factors, our key valuation highlights are here, where our cost of equity is 31.95% as compared to Bob's performance. And the market capitalization is 879%, as we shared earlier. So I'll talk about our valuation and this our discounted cash flow, the cash flow that we expect Bob to put out into the next foreseen accounting years as follows. And I would like to talk about the risk and mitigation factors as we don't have much time. So Bob faces commodity price volatility. And how can we mitigate this type of risk that Bob is facing? So Bob can use hedging and to diversify their higher margin products to reduce reliance on fluctuation in commodity market. Since they are market leaders, they can hedge their price against other competitors so that they will be favorable in the market. And we can talk about environmental pressures. Bob performs in a healthy environment, so they need to closely work in suitable environmental practices so that they will stand out from their competitors. And we can talk about the supply chain disruption, where they can use backward integration to get back to their suppliers and get their raw materials. And we have some catalysts for growth when we talk about increasing demand for oil. This is the things that will grow the company into the foreseen accounting years: expansion of sustainable practices and supportive government and industry policies. And our conclusion is we recommend a hold rating for Benso Oil Palm Plantation. Thank you.
Thank you so much for your presentation. The hold, who are you recommending it for? Those who are having the shares currently, or those who are buying, or those who want to sell? Okay. So you mean those who have the shares should hold it, and those who want to buy should buy. All right. So does Bob have a long-term liability? They don't. Why? Why is it that there are tax exemptions on loans and things, but then when did they pay it? So you mean they are making the money, so they don't need debt to run their firm, right? Okay. And also, you see, Bob, the price went up. It galloped. Okay. When, listen carefully and you'll be able to answer. When the CD and the dollar were at war, when the CD was performing very poor, what do you think happened that Bob's price rose from, it was around 6 cities to today is what, 25 point something? So what do you think was the trigger? No, hit on the thing. How do they earn in US dollars? You have an idea, but how do you earn in dollars? If you sell in Makwala market, you get dollars. So how? Great. So exportation. They export their products. So exactly. Exactly. All right. Thank you.
Can we go to evaluation? DCF, you have an upside of what? 350. Can you explain that? Okay. Current price is 5 cities. No, 25 cities. And your valuation gives us 5 cities. And so what does that say? Is the stock overvalued, undervalued, or it is fairly valued? Okay. It is very highly overvalued. So that should be a downside then. Should rather be a downside, but that's besides the point. Um, your discount rate. What discount rate did you use? The discounting factor. No, that is not the rate. That is the present value of the discount rate is usually constant. What's your WACC? Yes, that's the discount rate. How did you measure that? So I see that your cost of equity is equal to your WACC. Why? Okay. So how did you come up with the cost of equity? How did you compute it? Yes, I get that. But how did you compute your cost of equity? I mean, you can give them a chance to answer too. I don't suppose you did everything yourself.
So the technical part was mostly worked by Courage, but from the slides that we have here, he used the risk-free rate. He also used the beta, the expected market return, and the market risk premium.
So the cost of equity, in computing cost of equity,
Good day to you all, and thank you for having us. My name is Tego Ebenezer, and I'm here today with my colleague Eli Kembrifa. We are from Mark Eli Consults. Now, imagine a company that has not only dominated the market, but also continues to grow at an impressive rate. Guinness Ghana Breweries Company Limited is the company we are talking about. Let me take you through the company's overview. Guinness Ghana is a subsidiary of an Amsterdam-based spirits manufacturer, Diageo Highland Holdings, was incorporated in the year 1960, listed on Ghana's stock exchange market in the year 1990. It's mainly involved in the distribution and manufacturing of both alcoholic and non-alcoholic beverages. Such of these products are the Guinness, Malt, Smirnoff Ice brand, Origin Zero, Star, just to mention a few. Guinness Ghana has a network of over 60 key distributors that distributes these products to over 7,000 retail outlets across Ghana. Guinness Ghana trades on Ghana's stock exchange market under the ticker GGBL. It's currently the 11th most valuable stock on Ghana's stock exchange market, with a market capitalization of about 1.4 billion Ghana cedis, which is approximately 1.46% of Ghana's stock exchange equity market. Yes, making it the leader in its industry. Moving on, we'll look at our investment thesis. Per our research and analysis conducted, we are of the view that the stock is undervalued. We are estimating an intrinsic value of 8 cedis 82 pesos, which is an 88% upside in the next 6 to 12 months. As of 28 October 2024, the stock had a share price of 4 cedis 70 pesos, which is quite appalling. With the investment thesis, we'll provide you with two investment theses, the first one being the huge growth potential. But before that, there has been a consensus on the market, where the market thinks Guinness Ghana is going to remain volatile. Why? It started a year with a share price of about 3 cedis 50 pesos, increased to 5 cedis 10 pesos, and reduced to 4 cedis 70 pesos. But this is our view. We'll provide you with certain factors that collectively make Guinness Ghana a promising buy, particularly for investors who seek to buy a stable or who seek exposure to a stable and growth-oriented stock. Under the huge growth potential, Guinness Ghana has shown a robust brand equity and market leadership. How? With its affiliation with Diageo Highland Holdings, it has been able to gain a global recognition, therefore allowing it to command for a premium price, which will definitely lead to an increase in revenue. Guinness Ghana has shown a consistent financial performance, such as the stable cash flow, the controlled debt levels, which has enabled it to contribute to a healthy balance sheet. Last but not least, under the huge growth fundamental, Guinness Ghana is poised towards a growth potential in the emerging markets of Ghana. You see, with Ghana's growing middle class and increasing demand for premium alcoholic and non-alcoholic beverages, consumers turn to Guinness Ghana for such products. Under the attractive fundamentals, despite the good sales record and good track record of Guinness Ghana, the stock is definitely not reflecting its earnings. Why do we say so? Looking at the revenue growth, Guinness Ghana has shown a 34% increment in revenue compared to last year, but the stock is still undervalued. It has shown a stable cash flow. How? It has shown a stable cash flow due to its operational efficiencies. Due to that, it has been able to reinvest in expansion, marketing, and product innovation, but still the stock is not at its full potential. With the shareholders' returns, Guinness Ghana has its shareholders in mind, so it provides them with a consistent dividend and allows them to gain access to capital appreciation. Strategic positioning. With Guinness Ghana's local expertise and extensive distribution network, it has been able to cover a wide range of Ghana and is able to distribute its products across Ghana. We'll be looking at the industry and market analysis. Under the industry and market analysis, Guinness Ghana belongs to the beverage industry, where it spearheads. We look at the economic environment. Guinness Ghana, or the beverage industry, is faced with Ghana's inflation rate of 20.9%, the GDP rate of 6.9%, monetary policy rate of 27%, and the appalling cedi depreciation. All these factors come together and affect their cost of production. Therefore, there is a need for them to increase the prices of their goods. The competitive advantage. Guinness Ghana has the following competitive advantage over its competitors in the industry. The first is strong brand equity and market leadership, extensive distribution network, and the adaptability to market challenges. They are quite good at that. The market trends. The Ghanaian beverage industry is now trending towards a non-alcoholic and a health-conscious based option. Guinness Ghana has been able to capitalize on that and has provided innovative products like the Origin Zero, which is purely healthy and natural. Competitors, you have the likes of Casapreco, the Accra Brewery, Swahilium, and Special Ice competing with Guinness Ghana in the industry. We'll be looking at the SWOT analysis. Guinness Ghana has strong brand recognition, extensive distribution network, and a diverse portfolio asset strength. With a weakness, it's faced with a high operational cost, which is led or impacted by the inflation and the appalling cedi depreciation. Also, looking at some opportunities Guinness Ghana is poised to, the rising demand for non-alcoholic and health-conscious beverage option is an opportunity for Guinness Ghana. With the threats, Guinness Ghana is faced with an intense competition from both local and international brands. It's faced with the regulatory pressure on the advertisement and sales of alcoholic and non-alcoholic beverages. I would like to hand over to my colleague Eli Kembifa so he takes us through the company's analysis.
Okay, so we'll be looking at the company analysis where we'll be analyzing the fundamentals of the company. We'll be taking the financial statements of Guinness Ghana. So we realized that from the financial statements, Guinness Ghana's revenue has grown by average 29.11% over the last 5 years. And the year-on-year growth from 2023 to 2024 was 34.25%, which was quite impressive due to the volatility of the Ghanaian economy over the last 5 years. The net profit margin averaged 2.48% over the last 5 years also, and in the year 2024 was pegged at 1.47%, which goes to show that Guinness Ghana is generating excess revenue to cover their expenses, to be able to pay their shareholders dividends and also embark in other projects, expansion projects. Their P ratio currently stands at 41.6 and their earnings per share stands at 0.11 Ghana cedis. Looking at other key financials from the statement of financial position, Guinness Ghana has a dividend yield of 0.5%, a dividend payout ratio of 90% for those who want to capitalize on the dividend aspect of the stock, a return on equity of 12.7%, which means that for every share you buy, Guinness Ghana is able to efficiently provide a return on it of 12.7%. They have a return on equity of 2%, a low debt to equity ratio of 4.9%, which goes to show the company's low financial risks and goes to assure us of the company's going concern. The dividend per share currently stands at 0.022 Ghana cedis. Moving on. So for our intrinsic valuation, we decided to use the discount valuation model where we found the present value of estimated cash flows using various assumptions. So I'll be taking us through the assumptions that we used. The first was the discount rate, which we calculated using the capital asset pricing model. The variables of that calculation is also part of the valuation assumptions, so we'll touch on them. The terminal growth rate was 6.9%, which we aligned with the GDP growth rate of Ghana as at the time. The free cash flow growth rate was 15%, which was a precautionary measure due to the volatility of the market over the last 5 years, due to the COVID and the Russian-Ukraine war. The risk-free rate of 28.58% was the 394-day Treasury bill rate. The market return was 39% as per the GSE Composite Index, and then the beta value was negative 0.32, which shows that the stock return moved in an opposite direction to the market return. So, putting all this into play, we were able to calculate and get the intrinsic value of 8.82 Ghana cedis. Moving on. So now investors are not only concerned about a company's ability to make profit, but also how they do so ethically and responsibly. So Guinness Ghana, as part of its parent, Diageo, have embarked on an ESG initiative known as the Spirit of Progress, where they have 3 main priorities: to promote positive drinking, to champion inclusion and diversity, and to pioneer grain to glass sustainability, which is concerned with eco-friendly farming practices. The company stock was the 12th most traded stock on the GSE over the last 3 months, selling over 118,000 stocks to the tune of 600,000 Ghana cedis, which shows that the stock is highly liquid for those who want to capitalize on the capital appreciation aspect of the stock. Moving on. So some catalyst. The Guinness Ghana is an innovative company. They know the growing trends. People's tastes and preferences are changing. So they have been proactive in this aspect by introducing new products into the market, such as the Smirnoff variants, such as the Smirnoff chocolates, Smirnoff pineapple also. Yeah, so looking at the investment risk, the beverage industry in Ghana is highly competitive, and there's a high saturation in the industry. This is because there are lots of companies such as Specialized, Accra Breweries, who are also producing similar goods in the economy. But what gives Guinness Ghana an advantage here is the fact that, one, they have the economies of scale, they have the customer loyalty, they have the brand power, and they have the quality. They are known for quality products in the market. So we at McEllie Consult, we are not here to present a perfect pitch or a perfect stock. We are saying that Guinness Ghana we believe by our valuations are trading at a discounted price of 47%, and we encourage all investors to buy the stock because we expect a significant increase in the stock in the next 6 to 12 months. Thank you, and we are open to questions.
I must say your presentation is very well done. Who did it? Come again. I said who did it? Oh, please! I've been a student before. There's always one person who does it. Anyways, that's besides the point. Please let's go to your valuation. I don't see any projection for operating cash flow. Why? You jump straight to free cash flow. So okay, I mean, tell me what you did there. Because I mean, you have lines for capex, operating cash flow, and then you jump straight to free cash flow. How did you measure, or how did you compute the free cash flow? Okay. 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 Right. So you don't do any projection for the companies, like maybe revenue, like the company's income statement, balance sheet, and then maybe for their cash flow statement. Yeah. Okay. So what are the values? What are the incremental? What's the incremental? I mean, percentage. Like, by what percentage did you increase revenue when things are normal, and by what percentage did you increase revenue when things go overly well and when things don't go well? Okay. Okay. So that's okay. One last question. What are the things that the company is putting in place to increase revenue?
Are you from ETU? Okay. So I want to ask, what are some of the leading causes of accident in Ghana? What are some of the leading causes of accident in Ghana? Oh, thank you. So you want to kill people? So this is your business, right? You want to kill people, destroy marriages, send people to hell and things, right? but you are still telling us. That's just by the way. But your work is good. But I saw some. Go to your valuation. Didn't evaluation. Evaluation. The market return. How did you come out? Composite index. Okay. Okay. So assuming I invest in Bob right now, okay, what is the minimum income I'm supposed to earn? What's my minimum rate of return? Guinea, sorry. Minimum. No, I say rate of return. Should I invest in Guinness Ghana? What is the minimum rate of return I should be expecting on my investment? Is there? Is there? It's in your slide. Is there? Okay, what's the definition for um, CAPEM? What's CAPEM? How did you calculate your rate of return? Not return on equity. I'm asking question not from this side. Did you calculate a rate of return? Okay, so that means you didn't answer my question. What is the minimum rate of return I should expect in? Should I invest in Guinness Ghana? See, there is something wrong with your valuation. Yes. You should know. That's why I asked you what is CAPEM. You don't know what it is, right? Okay. Right. So it's good. Overall, it's good. But then CAPEM is the minimum rate of return I should get when I invest in a firm. So go to your financials and let me see something. No. Financial, your projections. The projections. This one. Look at your numbers. I'm seeing, I don't know if they are 75,000 cockroaches or it doesn't look like money. It doesn't look like it is money that is written there. I don't know if you get me. You have a way of writing money. So maybe it's 5,000 goats. I don't understand it. Yeah, but you know how they write money on check, right? You don't. This is not how you write it. Just small mistakes. Get it. All right. Thank you.
Oh, okay. So Savannah, so Lou called the
So, for outstanding participation in the 2024 stock pitch competition and financial analysis program, organized by the Young Investors Network and proudly supported by the Ghana Stock Exchange and Central Securities Depository. This certificate is awarded in recognition of your commitment to financial literacy, analytical excellence, and a remarkable contribution to fostering investment education among the youth. And this certificate is presented to Ezekiel Blessed Okono. So kindly replicate the same caption in your minds. This certificate is presented to Jafet Adeliki. I'm sorry if I got it wrong. And the next certificate to Felix Amo. Okay. here. Please, I think he's not here. This is presented to Cindy and team. Abner Hansen Ofusua. Please clap for her. Welcome once again, Mr. Benjamin Aka, to talk on the topic of innovations in stockbroking and its impacts on the market's participation. Please help me welcome him by clapping for him.
Good afternoon, everyone. I decided to write some small speech because I've been asked to come and talk about innovation. Anyway, I want to thank the Young Investors Network and the Ghana Stock Exchange for the opportunity that has been given me to say just a few words to you on this occasion. It's a privilege to stand before you to address you guys, exceptional guys, brimming with ideas and enthusiasm for the future of our financial markets. Your participation in this competition, I don't know who and who participated, but I'm sure all of you did, or most of you did. But your participation itself is a testament to your dedication and curiosity, qualities that are indispensable in shaping the future of our markets. Another indispensable quality to have today's world is innovation. Innovation is the heartbeat of transformation. Every industry that we see today owes its success to the bold steps taken by individuals and teams who dared to think differently, challenge set minds, and challenge the status quo and solve real problems. Stock brokerage itself is a cornerstone of financial markets, and it is no exception. It's an industry that has evolved over the years, influenced by technological advancements, shifts in investor behavior, and changing economic landscapes. Now, what is stock brokerage itself? At its most basic level, it's about connecting people to opportunities. And as stockbrokers, what we do is to provide individuals and institutions with access to investment avenues that help them build wealth, fund businesses, and grow economies. And hence, the impact of innovation in what we do, you cannot overestimate it. Consider how technology has already revolutionized the way we trade on the Ghana Stock Exchange and the way people invest. Back in the day when I started out as an investment advisor and a stockbroker, all we had was a whiteboard where we go with a marker and then write on the board, I want to buy 10,000 shares of this at this price, and then I'll shout it out, and then somebody will say that, oh, I also want some, and then we'll do the transaction. That's how we used to do it back in the days. But now, technology, we have overchanged and overhauled how we do business on the Ghana Stock Exchange, such that I can actually be in my office and be trading. I can be in my house on my bed using a laptop and I can trade. That's how far innovation has come. That's how technology has allowed that innovation to happen. Those days, transactions were cumbersome. You need to come to the exchange, be physically here, trade with other people. Once you are done, go back to the office, extensive paperwork, carry them all the way to registrars just to go and do transactions. Cumbersome. Sometimes documents get missing. Sometimes shares are reallocated to people that don't really deserve them. Somebody will come later on and try and get the things sorted out. It was a total mess. But because of technology, because of innovation, we have done things differently. And now things are way, 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 way different than they used to be. Now, things have actually then improved from just upgrading the systems. Now we are even talking about online trading platforms and mobile applications where anyone with a smartphone can now become an investor. These innovations that I'm talking about have not only simplified processes, but have also dramatically increased market participation, because now it's so easy. All you need is a smartphone and you can actually trade. According to global trends, younger and more diverse demographics are now entering the market in ways never seen before. And it's no different in here in Ghana. When I look at what the younger generation are able to do with just a smartphone in their palm, I'm amazed and awed at the potential of what can be achieved. However, this progress also brings its own challenges. As we broaden access to our financial market through financial literacy programs, such as the one that you guys have participated in, how do we ensure that new participants, the next generation of investors, are not just active, but informed, but are literate, educated, and understand what they are doing and what they are about to get into? This is where the next wave of innovation must focus. It is not enough to create platforms or tools that make trading easier. We must also prioritize investor education, transparency of the process, and trust in the system. We can do this through more collaborations, such as the one that the Ghana Stock Exchange has with the Young Investor Network, through investor forums and the continuous training of market participants, such that they are well equipped to take the market to the next level. In all this, let us not forget the human aspects of innovation. Innovation is not only technological. No amount of technological advancement can replace the need for relationship, trust, and ethical practices in stock brokerage. It doesn't matter what you do, it's a relationship that's important. If you cannot relate to others, if you cannot get them to be on the same level of understanding with you, what you are doing, you are not going anywhere with it. So as you, the next generation of financial leaders, continue to innovate, remember that the essence of the stock brokerage lies in connecting people to opportunities and empowering them to participate confidently in wealth creation. One of the greatest impacts of innovation in stock brokerage globally has been its ability to democratize access and make it available to everyone. But ask yourself, in our part of the world where financial literacy levels are low and uneven, and access to digital tools is still a challenge for many, how do we ensure that this innovation that we are talking about benefits everyone? The answer lies in designing solutions that go beyond profitability. Innovations must be inclusive by design, targeting the unbanked, those who don't have banks, those who don't access normal financial markets. And we should be able to reach rural communities and provide tools that are simple yet powerful. What if the yam foam that we keep talking about, the one we know about, what if we can use it to be doing some kind of trading one way or the other? That will allow the person in the most basic rural community to be able to participate, don't you think? I think so. So I think that this is where partnerships such as educational institutions, like the ones that you guys come from, governments and community organizations become critical. This is why, and I repeat, this is why UNB Stockbrokers has partnered with the Young Investors Network to achieve this for well over 5 years. If I look at the number of students that we have reached through the Young Investor Network, this has been a success for us in terms of the achievements. As the next generation of market participants in this capital market, you have an opportunity to think critically about these challenges I've touched on and propose solutions, because the one that proposes solutions and actually solves real problems that will add value to what we have here. So you have to think on them, propose solutions. Whether your ideas focuses on leveraging technology, the social media or the internet, or your solution lies in investment education, as we are seeing, or in creating localized trading platforms, one way or the other, you would have contributed to the dialogue on how we can make stock brokerage more innovative, more impactful, more inclusive. As I conclude, let me leave you with this. The future of stock brokerage, and indeed of any industry, is not just about technology, it's more about people. Thank you, and I wish you all the best.
Thank you so much, Mr. Benjamin. So indeed, the future of stock brokerage is not only about technology, but people. And that's why organizations like Young Investors Network exist. So next, Mr. Joshua Mensah is supposed to give us a short address, but he is not. Okay, he's here, but I'll do that on his behalf. It is a privilege to address you today on a topic that resonates deeply with our shared vision, empowering the next generation of investors through practical experience. We live in an era where financial literacy and investment acumen are no longer optional, but essential. As the world grows more interconnected and economies become increasingly complex, young people must be equipped not only with theoretical knowledge, but also the practical skills to navigate and thrive in this dynamic landscape. Knowledge, they say, is power, but knowledge without application is like a ship without a sail. It lacks direction and purpose. In the context of investing, this truth becomes even more evident. While textbooks provide the foundation, it is practical experience that transforms the concept into skills, turning potential into tangible outcomes. Practical experience demystifies the world of finance. At the Young Investors Network, we have witnessed firsthand the transformative power of experimental learning. Initiatives like the Stock Pitch Competition, Junior Analyst Challenges, and the Investment Quiz competitions have provided platforms for students to immerse themselves in the world of investing. These programs empower participants to analyze financial data, develop strategies, and present their ideas with confidence. They engage with tools that professionals use, bridging the gap between classroom learning and the demands of the corporate world. When young people are given the chance to practice investment, they not only build their technical skills, but also develop an entrepreneurial mindset. They learn to identify opportunities, assess risks, and think creatively about solving financial challenges. This confidence translates beyond investing. It equips them to become leaders, innovators, and change makers in any field they choose. Moreover, practical experience fosters collaboration and teamwork. Investment decisions often require diverse perspectives, and through these programs, young people learn the value of working together to achieve shared goals. Empowering the next generation of investors is not only the responsibility of a single organization or individual, it is a collective effort. Educators, parents, policymakers, and industry leaders must work together to create opportunities for young people to gain hands-on experience. Let us invest in programs that provide mentorship, access to financial tools, and a platform for young people to showcase their talents. Let us advocate for integrating financial literacy into national curriculum, ensuring that no young person is left behind. In conclusion, I urge all of us to remember that the future of our economies, our industries, and indeed our world lies in the hands of the next generation. By equipping them with the practical experience, we are not just preparing them for the challenges ahead. We are empowering them to seize opportunities, create value, and make a lasting impact. Thank you, and let us continue to champion the cause of empowering young investors for a brighter future and a more prosperous future. Yeah. So now I think the judges are ready to declare the results.
Hi everyone. My name is John Nani. I work with FinCap Securities, and I think the program has been insightful and educative for those of us who didn't participate. I'm sure you learned a thing or two from everyone who made a presentation. I've always been of the view that there is a very wide gap between industry and our education, and I think what has happened here is a step to bridging that gap. I mean, all of you have done excellently. Obviously, there's a lot more that can be done, and so while I'm sure next year somebody here may want to come again. Take a cue from here, and this whole business of bridging people with opportunities requires a lot of learning. I hope you get it. It requires a lot of learning, and so don't stop learning. Even while you are out of school, I think you should keep learning new things. Learning outside school is more difficult because it is not structured. I hope you get it. And so I'm sure you guys are preparing yourselves to take on careers in the financial industry, and it requires a lot of learning. Generally, I think you guys have done excellently. You have done fantastic work. There's a lot of people running out here who are even in the industry who cannot do half of what you guys have done. And so whether you come out on top or you come out at the bottom, the idea is, it's a competition, so we must name that somebody won. But the real value here are the lessons that you learnt from here. I hope you get it. And so whatever your position is, know that you have won by the things that you have learned. Thank you.
Practicing, and I urge you that if you didn't win, if you don't win today, don't give up. I came 2 times. So I realized the things I'm doing, I can take it to the next level. So I branched into writing articles about what we are doing here today. So for about 2-3 years now, I have a lot of articles in the Business and Financial Times about the stuff you are doing here today. So in case you don't win, you can take your stuff to the next level. Study hard and bridge on the gaps that we are going to point out to you from here. And I think this will be a long way to help you in your future. Thank you so much.
Okay, so Kofi says we have said that he's the senior analyst at Numed, right? So he passed through Young Investor Network. He's now a judge. He passed through the stockfish competition, and now he's senior analyst at the Numed Capital. Oh, let's clap for him. I remember Lawrence doing very well. So as I say, this is the practical stuff that Young Investor is doing. So we thank God, and also as Mr. Aka said, since inception, we are looking for the bank to support us. And let's clap for Mr. Aka. Oh, let's clap for him. Because they were there to support us. They know the dream. Okay. So Sylvester, please come and help us. So we want to declare the winner, right? So this one I have to call Mr. Aka. Let's start from the top five. Top five. So after will you give the this thing, the scores, or okay. We are also honored to have Madam Benis. Let's clap for Madam Benis from GIZ to observe how we do our financial literacy. This is the practical one, not the theory one. And I know that for today, I've seen what we have been doing. Okay. So, wow, it's tough. In fact, everybody has a team. Okay. And I remember, if you are Arsenal fan like me, and Arsenal is playing, and he's playing against a team that I don't want to score. They are scoring them. We can't say anything. But anyway, all of you are done well. So we'll start from top five. So the top five, let's call on my co-partner. Mr. Chebuzia is my co-partner to number 5. Top 5 place is Mark Ellie. Mark Ellie. Okay. Okay, so I'm on the top 5. So 5th position, sorry. Oh, please come. You don't don't worry. You've done well. So Ellie came in. Ellie came in. Adam Zachariah, right? What's her name? Okay, so we'll give yours to you. Okay, yeah. No. Okay. So we'll give it to you, yes. We'll give it to you. Okay, so we don't take a picture with it. So you think, okay, that's fine. Oh, this is the main one. So the next one is normal 4th position. Wow. ATU, are you in the house? ATU. Oh, they done well. Oh, no, Mister, are you in the house? Too much. So, AB and G advisors, number 4. They've done well. Oh, wow. So, what's the name? Jeff. Okay, Jeff, yes. No, we don't want to. Jeff and Alex. Wow. Oh. Charlie, my young investor people who are doing a good job are taking first place. Charlie, you should have been the number 1 though. So let me be biased more. Wow. Okay. Normal, the 3rd position, or 2nd runner-up, right? How we call it. So it's number 3rd, yes. So this is Market Masters from ATU. Oh wow, they've done very well. Charlie, difficult to trade them. Let me confess. Hey, Charlie, this is a serious. Let's say a testimony or what? Because it's difficult to train them. I'm on almost 200. Have you seen how God works? We are here today, 4th position, 3rd position. Please let's clap them. Let's clap for them. No. So give it to you. That it's this. We don't want to go to the next one. So thanks very much. When you're done, come and take a proper picture here, okay? So and normal, the 2nd place. So this one, Are you done or you can take the first one? Or maybe Madam Bennett can join us too. Or you can join Mr. Kofi to do the second place. Wow. Team NBA. I know they don't like they don't well. In fact, this is the second time Brian have been here, and I thought he would win, but Charlie, wow. Brian have been setting the questions for NIQ. This gentleman, wow. So Brian, Adam Zakara, and Regis. Nathan. Wow, I was at second for you. Done well. Yeah, you done well. Peter, can take the picture. And now, the 2024 stock pitch competition. The winners, in fact, from the beginning of this program, KNUSC have been winning this competition. And today, it has changed. It's going to University of Ghana. Today, it has changed. In fact, they said everything is from Legon. In fact, they've done well. They've done well. The 2024 stock pitch competition, PISEC, sorry, don't worry. So this goes to Wealth Wizard. Let's clap for them. Oh, let's give them a standing ovation. They won it. Wow. Oh, please. Oh, let's clap for them. Na efe. Oh, okay. Okay, fair. Then can I sit down now? Thank you. So congratulations. So we'll take a bet from you, then we are done. So thank you very much, Mr. Aka.
Thank you to everyone who made this program a success. Thank you to my fellow colleagues who participated. From the very onset, it has been tough. Musa especially was mafia us. We need to send our light out there in terms of financial literacy, entrepreneurship. And to the females who were in this competition, I want to also congratulate you especially for taking the opportunity to bridge the gender gap in the finance field. Thank you. God bless each and every one of you. Thank you.